Hi guys, Zaheer Anwari here on behalf of the dynamictrader.com. Can you all hear me, please? Can I get a thumbs up that you can hear me and you can see my screen as well? Administrator, brilliant. Hi, Adinda, fantastic. Okay, guys, thank you all very much for tuning into this week's mid-market analysis with FX Street. Thank you again, FX Street, for hosting this. Before I get into the analysis, I'm just going to direct you guys to the trendtrader.pro app page. This is the apprentice page. If you guys want to get involved in some trend trading and do some training this weekend, Saturday from 10 a.m. to 4 p.m., I'm holding a training session. And this comes with a whole month of support, okay? So you get trading tools, you get community support, you get stocks training, FX training, you get a video portal. There's a lot that goes into this. So if you want to switch your trading into trend trading, I know from conversations that a lot of people here that come into the FX Street webinars, they're very much from a shorter term approach. So if you want to take it to a longer term approach, then, you know, Saturday is the place to start, okay? Guys, it's £99 for a whole month of training. Okay, so please check out this website, which is trendtrader.pro/app, which is apprentice. Okay, let's switch screens. Let's do the analysis. Bear with me 1 second. What's going on here? All right, there we go. Yep. Okay, administrator, can you see my charts, please, or people out there? Can you guys see my chart? Hi, Marcello. Thank you very much. Can you guys see my charts, please? Administrator, anyone there? Can you see my charts, please? Yes or no? Have I lost sound? Okay, brilliant, Todd. Thank you so much. Right, fantastic. Okay, well, thank you for confirmation. I'm going to get on with the analysis, okay? So what you can see is a typical chart setup of mine. So on the left-hand side, I have the watch list. And notice it's an extensive watch list. So you've got the Aussie dollar, US dollar at the top, going all the way down to the South African rand, Japanese yen at the bottom. Quite an extensive watch list. Now, don't let that scare you. Don't let that phase you. You know, a good watch list or a big watch list is essential because you want to take advantage of all the best opportunities. It goes without saying, okay? If you're just focused on a few currencies, then what if the liquidity is not on that particular currency or those particular currencies that you're looking at? You want to have all the currencies available to you so you can take advantage of how the market makers are moving between currencies, because ultimately that's what market makers do. They move between markets, currency, stocks, commodities. So you want to keep an eye out on all of them. In addition to that, they move between commodities. Within each market, they move between instruments. All right. So hence why I have a big watch list. Now, as a long-term trend trader, I want to be able to hold positions for weeks to months. I want to have the time frames that allow me to do that. So monthly in the top left, which highlight the major levels of support and resistance. These pink lines are the annual levels. So they're the high, the low, and the closing price of 2015. Okay, so at the end of each year, my software will update to give me the high, the low, and the close of the previous calendar year. So when we go into 2017, these will change for 2016. Now, apart from being support and resistance, these levels are very important because generally, if price is within these pink lines, I consider it a consolidation. If price is trading above the high of last year, then it's a bullish market or a bullish bias. And below the low of last year, price has a bearish bias. Now, this isn't a steadfast rule. Remember, trading is an art, not a science. So there are times where I can overhaul that, particularly when the high and the low are, you know, a fair distance away. So if you look at the lowest price, it's around 0.7. You look at the highest price, it's around 0.84. So you're looking at around 1,400 pips between the high and the low. So you can see that that's an ample room for a trend to establish itself. If the pink lines are very close together, meaning there was a consolidation the previous calendar year, then if I would wait for a breakout of those pink lines. Okay, so it's not a steadfast rule, but in general terms, if price is trading above the high, we have a bullish bias; below the low, a bearish bias; within there, a consolidating market, but use discretion. Okay, weekly and the daily, two very simple moving averages. The black is the 200 on both the weekly and the daily, and the blue is the 50. Now, the 200 gives me the bias. The 50s act as support and resistance. So when price is trading below the 200, price has a bearish bias. If price is trading above the 200, price has a bullish bias. Now, remember, trading is all about probabilities. Trading is all about finding those high probability environments. In an ideal scenario, so let's say, for example, if you look at the pound Japanese yen. Okay, if you look at the pound Japanese yen, you can see that price on the weekly is trading below the 200 and below the 50. And on the daily is trading below the 200 and below the 50. So you can see that we have, alignment in terms of the moving averages. This is what we're looking for. If we go back to the Aussie dollar, US dollar, we can see that price is trading above the 200 and the 50 on the daily time frame. It's trading below the 200, but above the 50 on the weekly time frame. So this is now where we need to use discretion, because again, if we look at the distance between where price is and the weekly 200, you're looking at 2, 4, 6, 8, 1,000 plus pips. That's ample space for a trend to develop. I'm not going to wait 1,000 pips to then potentially take long opportunities if I can get in on this. If the weekly 200 was directly above price, acting as a level of resistance, then I would wait for it to clear and then look for long opportunities. So again, apply discretion. Trading is an art, not a science. In an ideal scenario, you want to have your whole checklist met. Whatever your checklist is made up of, you want to have that whole criteria met. When your checklist is not met, if one or two elements are missing, you need to think, is it worth taking the trade? If it's worth taking the trade, I'm going to take the trade, but I'm going to reduce my risk. So going back to the pink lines, if price is trading above the high or below the low, in an ideal scenario, I would allocate a full 2% risk. If price is trading between the pink lines, I would allocate 1% or 0.5%. Looking at the moving averages, in an ideal scenario, I want to have the moving averages all in alignment. So above both moving averages in a bull market, below both sets of moving averages in a bear market, I would allocate a full 2% risk. But like in this scenario, where price is trading below the weekly 200, but above the daily 200, but there is room for a trend to develop, I could still take the trade, but I would reduce my risk because I'm going against the weekly 200. And this is a very significant moving average. The daily is what defines the initial bias, because it's generally the daily that's usually broken first. However, the weekly is equally important. Okay. So if we look at what the Aussie dollar, US dollar is doing, well, we can see that we've had a trend to the downside. So the trend started in 2011 all the way down to 2015. That's about a 4-year trend. Went through consolidation because of the round number 0.70 acting as support. What we were waiting for was a breakout. Now, as the trend was bearish, our bias was with the breakout to the downside, but price does what it does. It's now broken to the upside. We need to be aware of where the next major level of resistance is, which is here 0.80, but there could be resistance levels based on the fact that there was a messy consolidation here. So that, be smart with how you attack this. Weekly trading below the weekly 200 and below the weekly 200 but above the 50. Okay, so 50 is acting as support, weekly 200 is acting as resistance. If price continues to the upside, then the round number 0.80 will act as resistance as well. We've also got this pivot high here. So there are quite a few resistance levels ahead. Looking at the daily chart, we can see that price is now establishing a bull trend. Remember, always let price establish a trend. We will never get tops and bottoms correct. Never. I know a lot of people think it's very easy to predict tops and bottoms, and they're continuously trying to predict tops and bottoms, but it's actually a very, very difficult way of trading. What you're better off doing is allowing a trend to establish itself. So we don't necessarily need to get caught up in the start of the trend. Find an entry point, ride the duration of the trend, the middle of the trend. This way you can compound and then have a trailing stop loss that will take you out when the trend comes to an end. Okay, let the stop loss take you out. Don't close positions based on levels or take profit levels. Let the trailing stop loss take you out. So you can see now that price is really starting to break through these resistance. So if you look at this consolidation level, we had resistance here, price has broken through it. We had another resistance here, pivot resistance. Price is now trying to break through that. Price, if it breaks and closes above this level here, then this is a good sign of a potential continuation to the round number 0.80. This may offer an entry point. Remember, however, we've got NFP out on Friday. Do you really want to get caught up in taking any trades with NFP out on Friday? Remember, there's added intraday noise when it comes to NFP. So, be smart with how you take trades over the coming days. I generally don't take trades. I'm not in the Aussie dollar, US dollar. So Wednesday, Thursday, Friday before NFP, I don't take trades. And then I reassess the situation on Monday. I may take compounds depending on how good those compounding opportunities are. But new trades, I tend to stand aside. Okay, so Aussie dollar, US dollar, looking quite interesting for a trend continuation. We want to see it go to 0.80. However, ideal scenario on the monthly, we want to see price go all the way back up to the figure 1. That's where your major level of resistance is. Okay, so we want to see price make light work. If you look at this trend, remember technical analysis is about looking at the past, finding patterns, and looking for that pattern to repeat. So we've seen this trend to the downside. We'd like to see this trend repeat back to the upside, ideally to the figure 1, even back to the high of 2011, which is 1.10. Remember, this is a 4-year trend. So this is not going to happen overnight. These are long-term moves that we're looking for. Okay, let's have a look at the Canadian dollar because that's made us a bit of a move. Okay, so we can see that from 2011, again, 2016, a bullish trend, came to 1.4, had a shooting star, failed to break through the high of 2000, break and close rather, high of 2015. We had a bearish engulfing candle and we've now seen weakness. Price is now trading below 1.30. We'd now like to see price potentially move all the way down to the figure 1. If you look on the weekly, trading above the weekly 200. So price has a bullish bias, but you can see now that it's back below the 50 and we could potentially see weakness towards 1.20 and then 1.1 if it clears the weekly 200 and then the figure 1. Daily, trading below the daily 200 and trading below the 50. So you can see that these are both acting as levels of resistance. And look at what price is doing. If you look at the structure, very neat linear structure. Price is not going to move in a straight line, but you're going to have these little pullback periods. Look at this period here. This is classic because what you've had is a move towards 1.3. We had indecision in the form of a spinning top. Price came back to the region of the daily 200. We had a bearish engulfing. We've now had weakness to the downside. Price is looking to continue to the downside because that is the direction of the trend. If you're taking any long opportunities on the US dollar, Canadian dollar, you're trading against the major trend. This is very difficult. Would you swim against the major tide or would you like to go with the tide? Yeah, it's the same thing with trading. You want to go in the direction of the trend. You want to go in the direction of the market makers. The market makers are the ones that are moving the market. Don't trade against them. Use them, leverage them, go in the direction that they're moving the market. Break and close below this level, and then we could see price move towards 1.2. Again, you could potentially get an entry point, but there is a support level right here. And you can see is here, 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 here. You can see that this is a level of support and resistance. I would wait for this to be cleared and then start looking for shorting opportunities. Again, as we're trading against the weekly 200, you will want to reduce your risk. Okay, US dollar, Canadian dollar. Let's have a look at the euro dollar because I know everyone very much obsessed with the euro dollar, and it is a very unhealthy obsession, guys. Don't be obsessed with the euro dollar. Only be obsessed with any currency that's in trend, and as long as it's paying you, that's as long as your obsession should last. Okay, so trend to the downside. After every trend, price consolidates. You can see it's very much in consolidation. Seeing a move to the upside in the month of March, but it's still within consolidation. Until it clears consolidation, not really interested. If you look on the weekly, very much in the area of consolidation. This is a trend, very profitable trend. Look how neat it was. Very profitable trend, now consolidation. If it breaks to the upside, then we could look for long opportunities, and that's really a break above this high point here, and even 1.2 potentially. So depending on whether you're aggressive or conservative, a break above here will offer you long opportunities. A break below here will offer you shorting opportunities. Until it breaks out of consolidation, you don't want to be trading this. And just to prove how messy it is, There is your trend. Look at the moving averages, the 50 acting as resistance, the 200 sloping down, both moving averages heading down, telling us a trend. Now look at the moving averages, flat. 200 has really flattened out. The 50 is flat. Moving averages are lagging indicators, so they confirm what price is telling us. If price, and we can see that price is going sideways, but the moving averages are confirming it. This is not a currency that you want to be involved in. Okay, now range traders, yeah, you know, range traders will draw support and resistance, and they'll then take positions based on price bouncing off support and resistance. But you know, let's have a look at this. If we draw all the levels of support and resistance in this particular area of consolidation, okay, I'm drawing it quite, you know, roughly. But if you look at all the levels of support and resistance within this area of consolidation, how long are your trades going to last for? How long are you going to be in these trades? Because each time you enter into a trade, price has to clear a level of support or resistance and then bounces in the opposite direction. It's just a very difficult way. It's an unnecessary way, and on the long run, it's quite a fruitless way of trading ranges. I know people will make you believe otherwise, but you know, you can see it for yourself. If you look at this, if you open up short positions and hold them for the whole duration of the trend, rather than getting in and out of trades and consolidations, this is not where you may be able to make money, but you're not going to grow an account. It's in these periods where you're going to grow an account. And I'm talking about that large Warren Buffett size accounts that over the long term you want to be looking at. Okay, let's move on. Euro pound. Let's have a look at how that's reacting to 0.80. You can see bullish move to the upside, 0.7 acting as support, 0.8 acting as resistance. The trend is bullish, struggling to break through the high of 2015. There it is, struggling, tried in February, tried in March, but so far has been pushed back down. We want to see momentum continue. Above 0.80, that's when we can look for long opportunities. Weekly, 200 acting as resistance, above the 50, so we need to see the weekly 200 cleared and 0.80 cleared and the high of 2015 cleared. Once those levels are cleared, then we could see bullish strength potentially. Trading above the 200, trading above the 50. So that's looking interesting. 50 holding strong as support. Quite a messy looking trend though, not one that's very appealing. If we go back to the Aussie dollar, US dollar, and if you open up the daily chart, you can see that's a much neater looking trend. Whereas if you compare it to the euro pound, open up the daily chart, the euro pound is a lot messier. So, you know, again, do you want to get caught up in a trend that's quite messy, where the pullbacks are quite deep? Potentially you could get spiked out by a few pips. You know, there's all of these variables. There's all of these sort of questions that need to be answered. And that's all very much dependent on how you place your stop losses, how wide your stops are, what kind of trader you are, how you like to compound. There's various questions that come into this. Okay, let's look at the pound Aussie dollar. Pound Aussie dollar, we're seeing good weakness to the downside, trading below 1.90, so that's acting as resistance. But the low of 2015 acting as support, 1.8 acting as support. In addition, we've got the weekly 200 acting as support. It is below the 50, but it's acting as support. So you can see we've got three levels of support. We've got we've got the pink line, we've got the low of 2015, 1.8, and the weekly 200. If we look at the structure, we can see that it is trending to the downside. Price is doing lower highs, but since from this point here to this point here, so from here to here, it's been quite messy. Look how choppy it's been. The trend now, it's starting to change, and this is what we want to see. If we look at the trend, the pullbacks aren't as deep. It's starting to change its structure. You know, if this trend structure continues below the weekly 200, then I may look to trade this. But for now, I really need to see those support levels cleared. So a little bit of patience. Pound Canadian dollar. This is looking interesting too. Pound Canadian dollar, weakness to the downside at the round number 2.1. Again, that was the high of 2015. We had weakness to the downside, double top formation, if you like, weakness to the downside. Price is now faced with a major support, which is the 2014 support. If it clears this, then we could see weakness towards 1.8 and the low. So there is potentially space of around 500 odd pips, 500 plus pips for a weakness to the downside. So if you compare that to the pound Aussie dollar, so if we go back to the pound Aussie dollar, we can see that there really isn't any room to that low of 2015. There's no room there. However, on the pound Canadian dollar, there is room to the 2015 level. And there's room of a good 500 odd pips, possibly even greater than that, 600 plus pips. So there is room for a trend to develop. However, reduce your risk. If you decide to take any trade, reduce your risk. Look on the weekly time frame. Look at the trend moving to the downside quite nicely. We've got the 1.8 level here, and we've got the weekly 200 acting as support. So any short trades, again, another reason to reduce your risk. Daily time frame is looking interesting because we're below the 200, we're below the 50. In addition, the 50 has crossed below the 200, so that's always a positive sign to add further confidence to your entry. But until it clears that level of support, we want to be standing aside. But one to keep an eye out on. Once it starts breaking below support levels, then one to keep an eye out on. Okay, pound Japanese yen. Now, this is a currency that I'm short on, and frustratingly, it's just kind of stuck in a sideways move. But let's have a look at it. Pound Japanese yen. We see we had weakness to the downside. Now, remember how I said when price is trading below the low of the previous calendar year, that's when price has a bearish bias, and that's what it has currently. Despite this move to the upside in March, price still has a bearish bias. We can't expect price to continuously create lower lows. Look at this trend to the upside here. This is a trend from 2012 to 2015, so a 3-year trend. If you look, move, and then a move against trend, move against trend, move, indecision, move against trend, so on. But the trend is up. But there is that odd move against trend. That's all that's happening here. This move is not a reversal in the trend. It's simply a move against trend. This is not a reversal. Trading below the 50, trading below the 200. So we have a bearish bias on the weekly, trading below the 200, trading below the 50. So we have a bearish bias on the daily. We can see that we're going through consolidation. Now, if you look at this particular currency, it tends to pull back or consolidate around round numbers. Here's 170, pullback. Here's 160, pullback, bit of a messy consolidation. We did have a potential head and shoulders pattern here, which could have confirmed further weakness. Remember, head and shoulders pattern in a bear trend is a continuation pattern. Don't look for analysis that causes reversals. Look for analysis that favors the trend. Head and shoulders in a bear trend is a continuation pattern. However, remember, nothing is guaranteed. What we've had is a reversal back into this area of consolidation. The 50 is acting as a level of resistance. We want to see this level hold strong and then weakness to the downside. At the moment, this is just consolidation. I've been in this trade since this bar right here, this long bar here. So going back to February, I've been in this trade, and frustratingly, it's just been going sideways. But remember, that's part and parcel of trading. A good trade is one where you follow your trading plan regardless of the outcome. At the time of taking this trade, which was at this level here, at the time of taking this trade, this was a good trade suggesting a continuation. I was not to know that this was going to happen. However, I've allocated a stop loss that allows for this to happen and then a continuation. And if you look at the pullback here, deep pullback and then a continuation. So this is a pullback. This is not the end of the trend. What I'm looking for now is a trend continuation. So once it breaks below support levels, this is when I'll start compounding. Okay, last currency we'll look at is the US dollar, Japanese yen. There we go. Okay, dollar yen, we can see that price found resistance. It's trading between below those pink lines. So price has a bearish bias. 110 though acting as support. We want to see 110 cleared and then price potentially move all the way down to 80, 75 along those levels. On the weekly, trading below the 50, but above the 200. So we're stuck in a level of between levels of resistance and support. Ideally, we want to see if 110 is cleared. If you look at 110, which is around this level here, 110 is cleared, then you have around 500 pips to the weekly 200. So again, if you look for any shorting positions, adjust your risk accordingly, reduce your risk. If you look at what's happening on the daily time frame, below the daily 200, below the 50, that's great. 50 below the 200, both are angling down, starting to flatten off a little bit, and that's because price is going sideways. But we want to see this momentum to the downside continue. 110 cleared, and then further weakness. Okay, if I just open up the daily chart, I'll show you where I last traded this. So you can see if we move it back, that's when I last caught a really good trend on the US dollar Japanese yen. This is back in 2012, 2013. Since then, it's just been very messy. If you look, messy, a little bit of a trend, nothing great, very messy. This was another period where I made a bit of profit, but not, short-lived trades, very short-lived. You can see that it's moved from around 110 to 120, a move of 1,000 pips, price pull back, stopped me out, and since then, just been going sideways. Very difficult to trade since then. We now had a breakout to the downside. Okay, now the thing to note about round numbers, here's that 120 level. It's a zonal area. It's not a hard level. And you can see how price is consolidating or oscillating around 120. Okay, so this is how you want to be looking at round numbers. Don't look at them as hard levels, look at them as zonal areas. Okay, guys, that's me done for today. I'm just going to go to the questions. Are there any questions, guys? Okay, I'll just give you guys a minute to type in any questions that you have. Okay, no questions coming through. That's fine, no problem at all, guys. Okay, before I call time on the webinar, I'm just going to, sorry guys, I'm just going to direct you all to a few pages. Okay, so I'm assuming that you guys can see my page. So first of all, that's the apprentice program, trendtrader.pro/app. That's for the apprentice training. Sorry guys, bear with me 1 second. Okay, the ebook, please download this. This is a free ebook, the Almost Complete Guide to Trend Trading. When it comes to technical analysis, there's probably no better book out there than this particular book. So it's free, and it will, without a doubt, change your whole approach to trading and your whole idea of what technical analysis is about. You want to be able to remove the subjectivity. To remove the subjectivity, you need to have rules, and this book will help you with that. So please read it. It's a free book. Okay. Please follow me. Please add us on Facebook. So please search for The Dynamic Trader, facebook.com/The Dynamic Trader. I do a lot of periscopes and live Facebook lives. So they're all recorded. They're all on here. So please like the page and catch up on those. You can follow me on Twitter at Zaheer Anwari. Follow me on Dynamic Trader. Follow us on Dynamic Trader at Dynamic Trader. And also, finally, if you are on Instagram, please follow me on at fx.mentor on Instagram as well, at fx.mentor. Okay, but most importantly, guys, this Saturday, I'm going to put this in the chat box. There you go. Trendtrader.pro. That's for the apprentice training. And if you want the ebook, I will put this across as well. Here is the ebook as well. So they're the two links that you want to really check out. Okay, guys, thank you all very much for your time. Thank you all for tuning in. I don't know who's out there, but if you do want to drop me an email as well, that would be useful. At least I know that there's people, tuning in and getting, lots of useful information from the analysis that I'm doing. So Zaheer at tdtpro.com. If you want to email me, that'll be great as well. Okay, guys, thank you all very much. Take care. See you soon. Bye-bye.